Let's get right into it. Bitcoin, Ethereum, Cardano, Dogecoin, and literally every other crypto have tumbled in price since Wednesday after China announced to block cryptocurrencies from being used as a form of payment in the country. In the midst of the news, Bitcoin fell to $30,000 in a matter of hours, erasing all 2021 gains before it started recovering again. Speaking of gains, Tesla's $1.5 billion investment in Bitcoin is no longer in green and just breaking even at the moment. And speaking of Tesla, many people have been pointing fingers at Elon Musk for sparking the sell-off with his tweets that the car manufacturer will no longer accept Bitcoin. In this video, we are going to go through the development of events leading to the crash on Wednesday and talk about what the smart investors are doing at this time. Before we start, please smash that like button if you enjoy the video and hit that subscribe button along with the bell button to get notified every time we upload a video. Overall, the general financial market has concerns regarding inflation and the possibility of a further hike in long-term rates by the government. But what really started the carnage in the crypto market was Elon Musk's tweets last week. Tesla CEO Elon Musk surprised a lot of people on Wednesday when he tweeted that the electric car company would no longer accept Bitcoin as payment due to the environmental impact of cryptocurrency mining. It was shocking, in part because Musk is known to be a crypto enthusiast and Tesla only started accepting Bitcoin in February, but also because Bitcoin's massive energy demands are well established. This announcement has people second-guessing their Bitcoin investments, and the market has been dipping since then. Musk recently tweeted that Tesla has diamond hands, which basically means they are still holding their Bitcoin investment to calm down the market from further dips. Some have been doubting that he has dumped his Bitcoins already, but to be honest, as Tesla is a public company, they need to declare if they sell, so that is not a possibility. Fast forward to yesterday, China has announced over its social media WeChat that cryptocurrencies are no longer accepted as a form of payment in the country, and oh boy, the market reacted. This is the latest chapter of China tightening the noose around crypto, said Antony Trenchev, managing partner and co-founder of Nexo in London, a crypto lender. Virtual currencies should not and cannot be used in the market because they are not real currencies, according to a notice posted on the PBOC's official WeChat account. Financial and payments institutions are not allowed to price products or services with virtual currency, the notice said. Well, what we can conclude is that the statement doesn't have any new regulatory steps, according to Yu Lingku, a vice director in the China Development Institute think tank in Shenzhen. The notice was highlighted by the central bank, but compiled by industry associations rather than government officials, making it less powerful, according to Liu Yang, a lawyer at Beijing-based law firm Deheng Law Offices. They just want caution, said Bobby Lee, founder and chief executive officer of the crypto storage provider Bale. They feel the market is overhyped, there's speculative trading, they're looking out for the best interests of the people. We know from history that Beijing since 2017 has abolished initial coin offerings and clamped down on virtual currency trading within its borders, forcing many exchanges overseas. The country was once home to about 90% of trades, but the lion's share of mining and major players have since fled abroad. There is also another major point being that China has recently taken steps to issue its own digital yuan, seeking to replace cash and maintain control over a payments landscape that has become increasingly dominated by technology companies not regulated like banks. It's no surprise to me as Chinese capital controls can be challenged by cryptocurrency purchases in the country and transfers out of the country, said Adam Reynolds, CEO of APAC at Saxo Markets. So avoiding the use of them in the country is essential to maintaining capital controls. The only tolerable digital currency to a government with a strong capital controls is their own CBDC. Not only was the crypto market affected, but stocks dipped, extending last week's declines as inflation jitters linger. There is no need to panic as Bitcoin returned back above $40,000. That's a considerable bounce after dropping as low as $30,681 earlier today and keeps yo-yoing. Of course, the rebound appears to have coincided with Elon Musk's Diamond Hands tweet, mentioned earlier, meaning the Tesla CEO potentially both single-handedly started and ended this market downturn. Well, it is far too early to say whether we're actually through the worst of it, of course, but Bitcoin is back above the level it was before this panic-induced flash crash. The next few hours and days could prove crucial in determining the longer-term trajectory of Bitcoin and the broader cryptocurrency market. Various cryptocurrency experts and market analysts that we've heard from so far today have been divided over whether this current crash is of similar magnitude to the one Bitcoin experienced at the end of 2017, or just a price correction on the way to new record highs. In the bull market, seeing these big drops is common. The last time we saw a bull run, Bitcoin dropped at least half a dozen times by 20 to 30% before it then went to an all-time high. With hundreds of projects getting built across various blockchains, key crypto segments like DeFi up at $71 billion of total value locked, NFTs getting their fair share of attention in mainstream media, Ethereum, the second largest blockchain in the world, getting multiple efficiency updates and moving to POS, proof of stake, in the upcoming months, the markets are bound to make a quick comeback sooner. Every bull run within crypto has seen 5 to 7 declines in excess of 30%, and this cycle is no exception. Ethereum is at a different stage in its cycle. The market seems to be struggling to stop it in its tracks. More than anything, this undeniably large correction and those before it proves is that the crypto market is resilient, that it's a long-term game ill-suited to the weak-handed. Don't forget that this is not the first time we have seen this. Remember 2020 when COVID-19? News when stock market melted, and 2008? These dips happen all the time. These moments can be real opportunities to make major gains rather than sell your crypto portfolios. 5 takeaways in these times of crisis are: 1. Keep calm and carry on. 2. If you get an opportunity to buy the dip, then maybe you should consider that. 3. Keep your emotions on the side when trading. And 4. Evaluate your exit strategy. Always have a diversified portfolio to limit your risks. With this, we have come to the end of the video. Thanks for watching. If you found this video informative, please hit the like button, share with friends, subscribe to the channel, and don't forget to turn on the post notifications to not miss any new videos from us. Till then, goodbye.